morning, and welcome to episode 212 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 19th, 2025. Hamas has offered to release 3 Israeli hostages ahead of the scheduled release on Saturday as both Hamas and Israel inch closer to an end of current hostilities in the Gaza region. The U.S. and Russia both sat down to talks to hopefully end the fighting between Russia and Ukraine. Ukraine was not at the table as part of that discussion. Elon Musk was urged to take Senator Rand Paul with him and go audit the $425 billion worth of U.S. central bank gold held at Fort Knox in Kentucky. We'll see how that develops. The New York Fed just recently came out with fourth quarter data on U.S. household debt, and folks, it is not good. Serious delinquencies are up, and credit card debt is up to a record $1.2 trillion, with the average of over 20% interest due on that revolving debt. Let's take a look at the numbers and see where they stand for the past week. Gold is up 2.1%. It trades at $2,942 this morning. Last week it was $2,881.30. Silver is also up this week, 3.9%, trading just over $33 at $33.02. It was $31.77 an ounce last week. Platinum is up $2 or 0.2% to $992 an ounce. It was $990 an ounce last week. And palladium's up 1.7% to $1,009 per ounce. It was $992 last week. With silver moving up further than gold, it's going to take less ounces of silver to buy an ounce of gold this week. So your gold-silver ratio is down to 89.10. It was 90.69 last week. And the US dollar under a slight bit of pressure. It's trading at 107.18 this week. It was 107.88 last week. In the past week, basically what we saw was gold continuing to surge, silver continuing to follow on gold's coattails until last Friday, where we saw a bit of a sell-off in both metals, which is to be expected. We expect some profit taking when you see good moves. Gold's up 11% so far on the year, and silver is up comparatively. So we saw a bit of sell-off for profit taking on Friday. On Monday and Tuesday, the markets immediately recovered and we're at higher levels still. So let's face it, folks, we've got a long way to go in this bull market in gold and silver. Western investors, that's North America and Europe, are not even in this market yet except to sell into it. They're not buying into it yet. This is all central banks. This is all Chinese retail because their economy is struggling worse than ours is. So it's going to get a lot better once the Western investor is in this, and we've got a long way to go. If you're not in it, you need to get in it. Trust me, that's the best way we know to keep what's yours, is to buy gold and to buy silver. As always, we'd like you to go ahead and join us, subscribe to our YouTube channel, like us, send us your comments and questions. Got some great comments last week on the gold-silver ratio commentary. Thank you for that. Go ahead and follow us on social media. Take our twice weekly, always something interesting alerts and our once monthly information line newsletter. But in the end, don't ever forget that getting rich starts with keeping what's yours.